Welcome to this IRPP webinar on the future of employment insurance within Canada's social safety net. This webinar is made possible in part thanks to a contribution by the School of Policy Studies at Queen's University, one of Canada's premier school of public policy and management and home of the Masters of Public Administration program. And I'll leave you with the moderator of today's event and research director at the IRPP, Colin Busby.
Hello and bonjour tout le monde. This webinar is being broadcast from the IRPP's headquarters in Montreal, Tiohtià:ke, which is located on unceded Indigenous lands of the Kanien'kehá:ka Nation. Our goal today is to come away with a greater understanding of EI's role in Canada's social safety net, its shortcomings, and how it should be redesigned for the post-pandemic world. We have three experts in employment insurance and labor markets with us today. Tammy Schirle from Wilfrid Laurier University, as well as Mikal Skuterud, and Stephanie Louis from the University of Waterloo. Please participate in today's discussion. You can do so by asking me questions in the questions tab on the right-hand side of your screen. And at the end of the presentations, we're going to get through as many questions as we can. But before we launch into the presentations, I'm just going to spend a couple of minutes discussing and going over what EI aims to do and how it works. EI is a federal government program, and its main objective since its creation in 1940 and right up to today is to provide temporary income support to unemployed workers while they look for employment or upgrade their skills. Here's how it works. It's financed by employees and employers who must pay premiums into EI on all earnings up to a maximum earnings of around $54,000 per year. Employees pay $1.62 of EI premiums for every $100 they earn. Employers pay 1.4 times that amount. Some workers, in particular the self-employed, do not pay EI premiums and cannot qualify for the program. These funds get paid out in the form of regular EI benefits to those who lose their jobs through no fault of their own. Eligibility for regular benefits and the duration of benefits received depends on where one lives. With around 65 different regions in Canada, regionally variable entrance requirements and benefit durations make it easier to access EI for long periods of time in high unemployment rate regions. In low unemployment regions, qualifying for EI requires a laid-off worker to have worked more hours to access shorter lasting benefits. Benefits are paid out at 55% of earnings, up to a maximum of $573 per week. The total program figures here, seen in front of you, are for 2019 and show that over 60% of all premium contributions go towards regular EI benefits. And although EI regular benefits is the core function of EI and much of the focus of our discussion today, over the past many decades, EI has expanded to extend a number of special benefits to workers who take time off work due to specific life events, such as illness, pregnancy, caring for a newborn or newly adopted child, a loved one who is seriously ill with a significant risk of death. In 2019, spending on these benefits amount to around 1/3 of all EI spending. Now, a lot of criticism towards EI and its faults centers on the issue of whether laid-off workers can access benefits and how much their benefits are worth. So over to you, Tammy, for your thoughts on this.
Okay, hoping that worked. Thank you, Colin. So what I'm going to do today is try to help us give a bit of a picture of our labor market and the people who are working in it. And I hope to help set the stage for a conversation about how well the current EI system is doing in terms of covering today's workers. Now, when I think about the policy framework we have in Canada, it seems to me that most of its foundation was largely built by the end of the 1960s. And it was built with people working a single full-time job in mind. And for the most part, I think it seems well suited to covering those workers. So the question then today is, how well is that doing in terms of the broader labor market? Taking a look at our labor force survey here, we can see that in 1976, 76% of employed Canadians fit that category of being that full-time paid employee with just one job. But the likelihood of working as that person, that has fallen over time, so that by 2019, only 67% of workers are fitting in there. Now, part of what changed is that more people took on some extra work. And this is the category of workers working full-time as paid employees in their main job, but they have at least one other job as well in addition to that. So this more than doubled from 1.4% of workers in 1976 to over 3% by 2019. Now I'm going to keep layering in more workers here. What also grew over time was the likelihood of people working part-time. And there was some increase in the portion of workers working part-time as a paid employee in their main job, but also working multiple jobs. So overall, these layers that we have so far, and we see here, these are the folks who are contributing, for the most part, to employment insurance as paid employees. And at least in theory, we think that they're going to be covered by the system. Now, the portion that are paid employees in their main job has only changed here by 3 percentage points over this time period. So then let's look at the folks who aren't going to be covered by EI. And the biggest category here are the people working full-time in self-employment. Now that has fluctuated over time. It certainly changes with the business cycle, but as a share of employment, that's only increased by less than 1 percentage point since 1976. We can then add in people working part-time in self-employment. This slice here is representing those who have one job. That has grown slightly. And then finally, we add in this very small slice of people whose main job is self-employment, either full-time or part-time, but they are working multiple jobs. Now that's grown over time, but you can barely see it here because it remains less than 0.5% of our workforce. Now I think the main takeaway here from this layered cake that I've put together is that the composition of workers has certainly changed quite a bit over time. Most of that change seems to have happened here, characterized here, by the early 1990s. And then the question then is whether our system is supporting those who aren't in that full-time paid employee position and whether it's doing a good job there. Now, before we move on, I have to highlight the key challenges or any gaps that we might find in our employment insurance here. They are gendered. So here, for instance, men are the ones who are mostly working full-time, self-employed in that one job. That's that light pink bar that we see in the graph there. We see that women are the ones who are dominating in terms of part-time work, and they're also the ones who are more likely working at those multiple jobs. I also wanted to quickly highlight some age differences, which perhaps surprised me. I expected the folks in the younger group here to be much less likely in a full-time job than what we see. They actually seem to be more likely than some of our older age groups here to be those paid employees with one job and working full-time. Now, for the self-employed, I wanted to break them down here to show whether they are incorporated or not. And that's important because I think there's a lot more cyclicality in the data for the people who are unincorporated without employees. That's our lightest blue and lightest gray groups here in these bars that I'm showing. But what I think is interesting to think about here is the number of self-employed workers that are really both workers and employers. They have employees, whether or not they are incorporated. So in terms of insurance, we really need to think about whether we're thinking about insuring the worker or the business itself if we're going to move forward and trying to better cover the self-employed. I also wanted to think about how many of our part-timers could, at least in theory, be eligible for EI. So here, I looked at individuals and their usual hours of work and thought about them working a full year. I said, hypothetically, could they qualify for employment insurance? Now, anyone working 8 hours or less per week, and that's going to be the red bars that I'm showing down here, they aren't going to be eligible regardless of what region they are living in. And that's going to be based on, what unemployment rates are, what would they need to qualify. Working 8 hours or less for every week of the year isn't going to get them over that 420-hour threshold that gets them into the system. Interestingly, there's a lot of near-right retirees here in these red bars. They're paying premiums, but they will never be able to claim EI. Now, the darker orange part of these bars are the folks whose hours might make it over the eligibility thresholds, but it entirely depends on their local unemployment rates. So if they're in a low unemployment region, they might not be able to qualify. Now, the lighter orange represents the folks who might make it over the 700 hours threshold if they get to work full year. But if they have some breaks, they might not be able to make it in there. Among the part-timers here, we're then left with the folks in green on these bars. This is really a relatively small group that is working 20 hours or more per week, that if they're working full year, they could be confident in their EI eligibility. Now, ultimately, what this implies is that there's a lot of people who are contributing who probably won't be able to make a claim. I just also wanted to highlight here, my previous slide excluded any students from the data, and the reason that we do that is students are going to be treated differently in this system. Here we have, in this right-hand side, is thinking about those students who are working a fair amount while they're students. They might even get enough hours that, in theory, they could qualify for EI, but they probably won't be considered eligible for EI in the sense of, you know, being available and looking for work. So it just seems a fairly raw deal here for the students, and I feel obligated to point that out for them. Now, the final thing I wanted to consider here is the extent to which a person's earnings are covered. For anyone with annual earnings below the maximum insurable earnings threshold, that's the MIE, they will be able to get that full 55% of their earnings covered by employment insurance. And so that's marked out here over time since 1976 by that thick black line in my graph. Now, what we want to consider here is people who are above that threshold. Okay, so consider a typical man in Alberta. This is following the top purple line there, especially as you get past 2010. Okay, they're going to be covered for much less than that 55% replacement rate. And realistically, when they're laid off, they don't care if the median earnings around them are high in Alberta. They care about whether or not they can manage their family standard of living and pay their bills that they've been accustomed to having to pay. And so in thinking about you know, whether or not our coverage rates are high enough, part of what we need to think about is where we're going to place that maximum insurable earnings threshold as a starting point. Now, these are men that I'm looking at in this particular graph, and their earnings, how they've evolved over time. Of course, women, if we were to look at them separately, they appear to have better coverage. But really, that's just because they typically have much lower incomes. And so we're not going to present that as a good thing. Yay, they're better covered. But I wanted to make sure that we highlight that difference here. Now, overall, I think that I've raised a few issues in just thinking about what's going on in our labor market. First, there's a sizable portion of workers whose earnings simply aren't going to be insured. Second, there's a sizable portion of paid workers who make contributions, but they're not going to be eligible for EI if they do get laid off. And then third, we might want to think harder about those replacement rates and how much we want to insure. But of course, none of this is costless, and as Mikal and Stephanie will be discussing next, we have to think about how the behavior of employers and employees gets shaped by the type of insurance that we offer. So at this point, I'll thank you for your attention and turn things back over to our hosts. Thank you.
Thank you very much, Tammy. It's true that job markets have been changing over time, and that does put a lot of pressure on the EI system to respond. But at really no time in recent history has our labor market been impacted more than what Canada is undergoing right now. So, you know, Mikal, over to you. Can you present your thoughts to us on this unique challenge that we're facing?
For having me. Can you hear me, Colin? Yep, okay, good. So what I'm going to be talking about is, first, what are the objectives of EI? So I think the way I see the objectives of any income support program through an economic crisis are twofold. This is at least how I think most labor economists think about this. On the one hand, you want to get income to families. You want to make sure there's some income security there. There's three reasons you want to do that. On the one hand, families and workers have experienced an income shock. They've lost income, and that's going to be stressful for families. We know from the literature that might impact the health within those families. We know things like it affects post-secondary educational decisions of kids. So it has real effects and is very stressful for families. So you want to help kind of families ride through these shocks. The other thing is you want to shore up the economy. When families experience an income loss, their consumption goes down, and you want to make sure that that reduction in consumption doesn't spill over to other sectors of the economy, and that you don't get a kind of a vicious spiral into a depression, right? And the third reason why you want to make sure income goes to people when they lose their jobs, and this may be the one we don't think that much about, is you want to make sure that workers don't feel like they have to accept the very first job that becomes available after they lose their job, because that job may not be a very good fit. And so by giving workers some income, they can be a bit more fastidious in their job search, which can improve worker job match quality. It can improve the productivity of workers on that job that they eventually get, which of course raises the productivity in the economy, and that's really important. So getting income to workers is important, but for labor economists, the kind of double-edged sword of the trade-off here that's a challenge is that we know the more generous benefits are, the longer benefits are, that it affects workers' job search intensity, the intensity with which they look for a job, or may even like train for a job or just be engaged in the labor market. And that's a real effect that we always have to think about, or traditionally have to think about. So that's the usual challenge, is how do you trade off this ensuring their support for families, but on the other hand, ensuring workers are still incentivized to get back to work, to train and to get back to work. So how do you do that? Well, what we've learned over the years is that there's a delicate balance there, and the main feature of these programs we've learned is to kind of provide clawbacks to incentivize workers. So we allow workers, and Steph's going to talk more about this in the next talk, we allow workers to get some earnings. We don't take back dollar for dollar every dollar they earn from their EI benefit or their income support benefit. So that incentivizes transitions back, and that's really important. But the COVID challenge here was very different, right? This was a very different world we faced in March, the policymakers faced in March, very different. Why? Well, because this number 2 objective here was not nearly as important. Why wasn't it so important? Well, because the objective here was to get workers out of work, not back to work, right? There is a contagious virus out there, and so to some extent, still the objective, the first order objective is to keep workers out of work. So we don't have to worry so much about that. In addition, the shock was massive. There was a huge number of workers affected. And so getting lots of income out really fast was really important for shoring up the economy. And so there were groups that weren't covered that Tammy talked about that we wanted to make sure we got income out to those folks, and those folks weren't covered under EI. And then the third thing is, and this may still be a factor, but it certainly was in March, is there's not much much point in incentivizing workers to go back to work when the jobs aren't there. And so there clearly was, in a recession, we know that these work incentive effects matter less in a recession because the demand is just not there. There's too much slackness in the labor market, okay? So the point is that to some extent, the policy challenge was a little bit easier in March than it typically is when you design these programs, because the emphasis was all about providing income security and shoring out the economy. And so it was all about just getting lots of income out there really fast to a lot of people. And it succeeded. The SERV program that was put out was incredibly successful. No question, it can't be criticized, right, on that front. So by the end of it, we've had 8.9 million workers, according to the government, that received this SERV benefit. 8.9 million out of a labor force in February of about between 20 and 21 million workers. So we're getting up to nearly half of the entire labor force, right? So this was a huge shock that affected a lot of workers. You can see it in this picture here. This is a picture I've been tracking and sending out on Twitter throughout this pandemic. This is measuring aggregate hours of work, which I argued at the beginning, a few other people did too, that we shouldn't be looking at unemployment rates, we should be looking at aggregate hours of work. And this gives you a sense of how big the shock was. So this is aggregate hours of work over time. It's been increasing over time, right? Because the population of Canada is increasing, there's more workers. You get these dips like here in the 1980 recession and the 1990s recession and the financial crisis in 2008. But look at the dip you get that we got here with COVID relative to those. So this is in April 2020. We saw a 40% reduction in the total hours that Canadians work. Now, the good news is we've bounced back a lot. we've bounced back a lot. I mean, if you'd asked me in April, I would have been surprised that if you told me that's how far we're going to bounce back by October, I would have been pleasantly surprised. The challenge, though, is that huge reduction was mostly people who were furloughed on temporary layoffs and people that still had their jobs but weren't working. What we're left with now is something very different. Right? These are not people that are increasingly not people on temporary layoffs or people that are employed that just aren't working their usual hours, right? These are people that are permanently displaced from their jobs. So in April, we had about 10%. This red here are workers that the share of all the jobless, people who've lost their jobs since February, that are permanently displaced. That was about 10% in April. A much bigger group was this blue. Those are the temporary layoffs. The gray here are people that have sort of given up and are just not participating in the market. They're not looking for a job. And there are folks that have that right at the beginning that did that. They left and haven't searched. And there are still folks like that. If we go up here to October, now we're up to 35% of these displaced workers are permanently separated. And a bigger chunk, if you add those in, we're up to like 60%, sorry, 80%. Those two together, the gray and red, are 80% of all the displaced workers are not on temporary layoff, don't have a job that they're anticipating going back to. Okay, why does that matter? Well, what we've seen now is a big increase in long-term joblessness. A very big increase. I cheat a little bit in this picture, so note that the vertical axis is starting at 500, but the point is, going from March to September, long-term joblessness is nearly, or has roughly doubled. The increase has been much bigger than it was in the 2008 financial crisis, much bigger. So we have a large number of Canadians who were working before this pandemic who are now have been jobless for more than 6 months, a very large proportion of workers. And so the question is, you know, on the one hand, it was clear what the objective was in March. On the other hand, you kind of worry a little bit this is going to come back to bite us. There was a huge amount of displacement from work. And that raises the question about whether or not the income support programs we have in place, whether they should be putting more emphasis on job retention objectives. Okay, so the trade-off that we faced at the beginning was, you know, people, when you teach dynamic labor demand theory and labor economics, one of the key messages students learn is that for companies, when they displace workers, they let go of workers, the costs of doing that are very different than the cost of increasing their labor force, of hiring new workers, right? Those is what we call asymmetric adjustment costs. In North America, it tends to be the case that shedding workers, getting rid of workers, is a lot cheaper, a lot easier than increasing your labor force. In Europe, it tends to be the opposite. And so what we saw in this recession, and what appears to be true in the data, is that Canada and the US has had much bigger increases in joblessness through this crisis than Europe has had. And that's partly a policy. I mean, in very large part, it's a policy choice. That is a complicated policy choice. But there's a cost of long-term joblessness that we have now. So the thought experiment, I think, is interesting to think about. It's not meant to be a criticism of the government or the CERB program, but there is an interesting question that if we could go back in time and ask ourselves, what if the policy menu or the options that we gave people in March, employers and workers, was different? What if the CERB program wasn't put out first and wasn't made as easily accessible? What if the CUES program was sort of the go-to program instead? What would the world look like now? What would long-term joblessness look like now? And I think that's an important question to answer, to understand these kinds of programs. Now, there was a CERB program in place. It was put out later. I would argue that there was a CUES program. The CERB, I think, kind of in some ways crowded out because it was very successful. It was an easy option. You kind of have to think about yourself as being a fly in the wall in a workplace, where an employee and an employer is discussing, you know, you can't work right now, what are we gonna do? And the employee is kind of saying, well, I got the CERB option on the side, and the employer is like, well, yeah, why don't you go on that and I'll call you back when the time comes. And then that time just sort of never comes. And so there's been a separation there. And so it's complicated. The wage subsidies, I don't know, I haven't been watching my time, but the wage subsidies program has been criticized. There's a concern that it's just rents, that it really isn't doing much to protect jobs. That is doing a lot to send money out to firms, but the number of jobs that are being protected as a result of these funds maybe isn't that big. That's kind of a hard, difficult question to answer, but it appears to be true that appears to be true. The other criticism of this CUES program is that by providing this income for employers, that it disincentivizes. It's almost like the kind of that moral hazard problem on the worker side in their job search. It disincentivizes trying to do new things, to innovate, to move into new areas, and it kind of, there are areas of the economy maybe that shouldn't be continuing. We got to move into new areas, new industries and sectors. And so maybe the CUES is not the solution. Back in May, Steph, who's going to talk to you next and knows a lot more about EI than I do, she asked the question, well, what's happened to the EI work sharing program? There's a program in Germany called the Kurzarbeit that gets a lot of attention. We have something like it. These are generally called short-time work programs and unemployment insurance programs. But the idea is that workers can reduce their hours. The job separation doesn't happen, so they're still attached to the employer, but the EI system pays them. It's not a wage subsidy to the employer, it's a wage replacement for the worker. Now, the public finance people say, well, maybe it doesn't matter who you give it to, the incidence is the same. That's not, we know that's probably not true, especially when there's nominal wage rigidities and so on. So I think this is a program that needs to be looked at a little more. I dug in a little bit to see how much this has been used. It's been used very little. So, you know, up to now, it looks like through the COVID pandemic, there's about 117,000 workers that have received benefits under the work sharing program in EI. There's been a very high, almost a 50% rejection rate on applications. I think it's a very onerous application. I think the criteria to qualify for this program, the eligibility requirements are quite onerous and narrow. So I think that's something going forward that I think Canada should look at. I wonder if some program like that had existed, maybe we would be living in a bit of a different world in terms of this long-term joblessness that we're seeing now. Okay, so that's it for me. Thank you very much for asking me to participate in this.
Thank you, Mikal. Stephanie, we're going to go to you next, but Mikal finished his presentation by discussing the importance of job retention and maintaining work relationships when employed. You have some research underway with the IRPP on a very similar topic, so over to you. Can you tell us more about this?
Yes, can you hear me? Is it all good? So thank you for inviting me to be part of this conversation on the future of EI, and along with public speakers that are great and inspiring colleagues. So I will be talking about the Working While Unclaimed program of EI. This is from what Mikal just mentioned. Actually, the work sharing program, the idea came up on Twitter from someone else. I think it's Brendan Bernard who brought it up. And but that program provides help for maintaining. All right, sorry if you couldn't see my slides. All right, so sorry. So that program provides support for employer-employee relationship to be maintained. And I will be talking about the Working While Unclaimed program, which is providing support for workers that have been displaced. And so it's targeted to displaced workers. And this is based on work I have done in the past with Brian McCall using EI claims data, and on more recent work I've done with Brian and Colin reviewing the Working While Unclaimed program. So the EI program has provisions for claimants to take part-time or casual jobs while keeping a portion of their EI benefits. Under the current provision, claimants can keep 50 cents of their EI benefits for every dollar earned while unclaimed, up to a maximum of 90% of their insurable earnings before benefits are deducted dollar for dollar. The objective is to prevent unemployed workers from being out of the labor force for long periods of time, like Mikal talked about, and to improve their chances of transitioning to permanent employment. By working while unclaimed, the unemployed workers are more likely to maintain their skills and workforce networks, and they can demonstrate their commitment to work to prospective employers. When you look at the data, you find that working while on claim is actually a common activity reported by about half of EI claimants. It's done in similar proportions by men and women and across all age groups and industries, slightly more in seasonal industries. From 2005 to 2018, the federal government launched a series of pilot projects to determine whether adjustments to the working on claim provision would encourage more EI claimants to take up part-time work and to work longer hours. And so the two parameters that were adjusted were the allowable earnings threshold before benefits are reduced and the rate of benefits reduction, also called the clawback rate. So did the claimants respond to these changes? The results of the evaluation of the pilots based on this claims data show that overall, increasing the threshold of allowable employment earnings without any reduction in benefits and reducing the rate at which benefits are clawed back for earnings above the threshold successfully drew unemployed workers back into the labor force and encouraged them to work more hours. So EI claimants responded positively to the changes in the provisions. But there are limits to these positive conclusions. And first, in the data, an important constraint for policymakers interested in the impact of programs on re-employment outcomes is that the administrative claims data provide limited post-claim job information. It's only for individuals who return to the EI system with a subsequent claim. So without data on future employment trajectory, there is no way of knowing when a new full-time open-ended job has been found and whether and to what extent, for those who exit EI and do not return, working while on claim has improved their ability to find a better job. Second, we find evidence that working while on claim crowds out the job search for full-time employment. And so while the objective is to return to employment on a permanent basis to a full-time job with greater income and a higher retention rate, this could be problematic. But perhaps the part-time work experience accumulated while working while on claim provides a stepping stone to full-time employment. So can we say something about that? We can use the investigates the working while on claim programs from other countries that have similar provisions and also more comprehensive data to get a sense of that. And so, for example, an evaluation of the program in France finds that for most unemployed workers taking on part-time work during a claim, it acts as a stepping stone towards finding employment, permanent employment. Similar research is in Germany and Belgium suggests that it's also the case for the long-term unemployed workers. Studies for other countries, however, report mixed findings, and some advise caution that the working while on claim provisions may encourage more people and firms to rely on part-time or casual work. So although the effects of the working while on claim provision seem generally positive, there needs to be a clearer clarity regarding the working while on claim re-employment outcomes in the Canadian context. Luckily, the claims data are now available in ERDCs, and in the past year I've spoken to at least 2 PhD students who are currently working with this data, and hopefully they'll be able to exploit additional data linkages to better track the labor market outcomes of the program users and non-users over time after they exit the EI system. It's worth mentioning that half of all EI claimants choose not to work on claim. So perhaps it's because they're not familiar with the program or because they do not see part-time work as an attractive step toward permanent full-time reemployment. There can be barriers to the take-up of part-time work from a supply side as a result of rapid skills depreciation or a lack of availability of part-time short hours work from a demand side. However, policymakers could test alternative working while on claim rules and consider more flexible parameters to engage claimants, such as, for example, converting weekly allowable earnings thresholds into monthly or even yearly ones, The CRB has a yearly one, for example, which would encourage the claimants to take full-time jobs, even if for short duration during the claim, as a possible bridge to permanent work. The parameters of the Working While on Claim program could be adjusted as well temporarily to be more generous during recessionary periods, as employers need to reduce the number of hours worked for, by their current workforce, or hire new workers in part-time jobs. So Mikal talked about that, the labor cost adjustments. And there is consistent evidence in the US and the UK that part-time employment is counter-cyclical, going up during recessions and down during expansionary periods. So here I looked at LFS data, and you see that for Canada, this graph suggests that this is also the case, using seasonally adjusted part-time and full-time employment series in percentage deviation from their respective trends. And what you see, obviously closer to the financial, the Great Recession, that in fact, if you look at the claims data, this is a period where there was an increase in the number of regular claimants who used the Working While on Claim program. It increased by 29%. So the program is being used during recessionary period, at least the last recession. What can we say about the current crisis? Do we see similar patterns? So what I've done is I've looked at changes since February in employment, and I cut it by age groups, and of course by part-time and full-time. And so relative to the February levels, both full-time and part-time employment dropped in April in light blue. And also obviously the recovery has been slow, because by October it's still below February levels. We see that it affected more strongly part-time work, but for all age groups. But what we see as well is that now for the core age of 25 to 54-year-old, there is an increase in the take-up of part-time employment for that particular group by October. So this is obviously a sign that part-time work is being used. Firms are relying on it right now. This is, however, not the case for the younger and the older population, who might need alternative policies to transition back into permanent employment. For the unemployed workers who do not work on claim, we can think of enhanced active labor market policies that may better improve their chances of transitioning to permanent employment. So for example, policies focusing on retraining and the use of more flexible EI benefit accounts could be more effective than the Working on Claim program for meeting the work incentive objectives. Briefly mentioning the new Canada Training Benefits Program, which is becoming available soon, later this fall, in the form of a training credit to workers that is portable across employers. France has had that system for a while. And so if you look at the monitoring and assessment report that ESDC publicly makes available, it's like a 600-page document, so there's a lot of information in there. But they do have these employment benefits and support measures program, which include the targeted wage subsidies, skills development, and self-employment training. I couldn't find publicly available studies that analyze the effectiveness of these employment benefits programs and these measures in Canada. But in the US, there is certainly, and very recently, there's been recent evidence that this type of active labor market policies, especially associated with job counseling services, have been effective following the Great Recession. So to finish, I'd like to mention that policymakers could consider the idea of a personal EI account, which would be a re-employment account given to laid-off workers at the beginning of their unemployment spells, and rather than considering, as it is now, a steady stream of benefits. And so these accounts would be personally managed funds that unemployed workers can use to purchase training or other counseling services, and it would increase and decrease with the employment and unemployment history specific to individuals. So that's something that I think the idea is not new, but we probably need to think about it right now in this conversation. So thank you very much. Back to Colin.
Thank you very much, Stephanie. We have questions. Tammy, this first one is for you. You presented a lot of the labor market information by gender, and particularly part-time by gender. Now, we don't have a lot of data on ethnicity and race when it comes to labor market outcomes, but we do have some. I know you looked at some of it. So what can you say about gender, earnings, labor market participation in general, and ethnicity, and how do they intersect?
So yeah, so ethnicity is something that we've only recently added into the labor force survey, and I think it was a lot of, we were prompted by what was going on in this pandemic to get a better sense of what was happening, in these various, for various demographic groups, in ways that we normally only measure every 5 years in the census, and that made it much more difficult. So that's given us some opportunities to do that, and we did some things early on. I recall Mikal looking at some numbers, just trying to think about how race and ethnicity was, going to affect people, or how people in different occupations aligned with race and ethnicity. And so we certainly saw, many of the occupations that was most heavily affected, things like food, accommodations, hospitality, tourism, there was definitely some racial divides along those lines. And so in thinking about the part-time employment here, I haven't mapped that out along those lines here because it's not in the files that I have. But I would expect that, a larger portion of people in part-time work are racialized, and perhaps the multiple jobs as well, much the way that we see that gendered. But at this moment, I can't really speak to any specific numbers on that. Yeah.
Thanks, Tammy. I've got next question, which I'm going to go to Mikal, but other people might want to answer too. But I really like this one, so feel free to put your hand up if you want in on this. The question is, if the federal government wanted to increase the generosity of the EI system, so if they wanted to spend more, would you prioritize increasing coverage, so the share of the population that can access benefits, or would you prioritize increasing replacement rates? Because 55% of someone's income is not a lot.
Yeah, so this is one of those ones where I'm tempted to pass that one over to Steph, who knows a lot more about EI. So I think what I will say is that Tammy and I did write a CD How intelligence brief on trying to look at the coverage issue, especially for the self-employed. It is a really difficult nut to crack. There is a perception out there that there's been a massive increase in gig work. My take on the data, I mean, we don't have perfect data to measure this, but my take on the data is the public perception may be a little inflated. And providing EI, and there's all kinds of challenges in providing EI with that type of work. So I think the type of system we have now, it doesn't lend itself to just expanding coverage in a straightforward way. It needs something much more fundamental to change. So I think replacement rates, from what I've seen, if you look across the world, especially look across the Atlantic Ocean to Europe, replacement rates in Canada are low, 55% is low. It's not clear that that margin is going to have a huge, like adjusting that margin will create a lot more work disincentive effects, but it can help families a whole lot. So that sounds, my gut instinct would be that. But I think Steph probably knows a lot more about that than I do.
Well, why don't I go over to you, Stephanie, and kind of add a little spin to Mikal's segue there. I mean, when it comes to sort of what other countries do and what other countries do in their employment insurance programs, you could talk specifically about working while unclaimed if you want, or open up more broadly. What do you take as sort of some of the more interesting lessons from this sort of a bit of an international overview of what's happening with similar like programs in other countries?
So yes, there are some differences in the working on claim program for sure, and the coverage as well, and countries that in which the working on claim for example, more particularly, have parameters that make the system a bit more flexible than here. And there are a few things that you see that, for example, the clawback rates are not as high as the 50% that we have here. They apply, they vary over the course of a claim as well. And so that adds some flexibility in the type of job that you can take during a claim, and maybe provide more incentives to take a full-time job, even for a short period of time. There are also differences in the eligibility, even for this kind of job allowance program, in that you have to have at least 1 day a week of job search, and you cannot work every day of the week, for example. And so to be able to be part of this working on claim program. And so I think that I think you can draw a bit on the other countries' experiences to try to see, you know, how will that fit with us, especially the concern that I presented regarding the fact that you don't want individuals to focus too much on part-time, if you think that there is a part-time trap, and that they spend you know, time searching and instead of just working part-time during their claim and searching for a full-time job. So certainly, you know, I think we can learn from these more flexible parameters from other countries. Now, in terms of more broadly comparing the different systems, I think that, you know, that maybe that's where the comparison ends, because, you know, Mikal mentioned that, but some countries have much greater hiring and firing costs. And, you know, in Europe, also there are countries that have a much greater share of part-time work. And in that case, the part-time work is actually more measured in terms of voluntary part-time work, and high retention rate for part-time work. The regulations make the type of part-time work more higher quality, a job that you might want to keep. And relative to the US and Canada, where in fact the part-time rate and share of part-time work is relatively lower. And so in countries, you know, you may wonder if this is the actual EI system that created that level of share of part-time work, and it goes both ways. So how, you know, if you change your system, that might change the whole employment landscape. So.
Thanks, Stephanie. I've got another one. I've kind of gone around the table, and I think I might go in the same direction here. But I like this. Another really good question. We talked about how, you know, access to EI depends on where you live. Now we've seen, as a result of the COVID pandemic, an increase in telework, a very, very rapid increase in telework, from about 10 to 40%, which may translate into perhaps a longer-term shift in how firms operate. Now, do you think this newfound ability to work from anywhere, for potentially up to 40% of Canada's workforce, has potential implications with respect to the regional approach in which we design ways of accessing EI and getting benefits? So to you, Tammy.
I get the big question here. So I think there's two parts to that question. The first is, you know, let's assume that people will continue with working from home as we have been, and how is that going to matter? And in that case, yes, you know, certainly that regional approach isn't going to make sense. I don't think it really makes sense right now, because what really matters is what's going on in the industry that you're working in, or the type of occupation that you have, and thinking of what kind of skills do you bring to the labor market. And that's where, you know, we're concerned about what labor market are you fitting into. And so for someone like us who can set up, you know, pretty much anywhere we need to under the circumstances, you know, it's our industry that matters, not where we're physically located. So that is something that I think is certainly worth reevaluating. Now, that said, you know, are we going to continue with this kind of telework and working from home? For a lot of businesses, especially where you have to worry about anything like mentorship and training and, you know, all of those in-office interactions that do have value, I don't see this lasting as long. Even though we can do it for a while, I'm not sure that's as long-term a problem.
Thank you very much. Question, Mikal. You talked about the wage subsidy, and you talked about the SIRB, the two programs, and the different timing of the rollout of those programs. But how much do we really know about, since you presented a counterfactual that, one person wants to draw you out on it here, and it's like, isn't it quite possible though that businesses could have just let people go regardless of what the wage subsidy would have been? And second part question, and two parts to it, is what caused such a large significant spike in permanently displaced workers over that period of time as well?
Yeah, so you're absolutely right. The counterfactual, it's not only a difficult counterfactual, but it may not be fair. It wasn't loaded in the sense that I'm suggesting that the outcome of that counterfactual would suggest that the government's made a mistake in the approach they've made. That wasn't the point. The point was only to say that the menu of choices that you give employers and employees at that time in March is going to have impacts. There's no question. And clearly the menu of choices in the early days in March was the SIRB. The queues came out with delay. I think a program like the work sharing program isn't even on the radar of most Canadians. And so there's a lot of, what plays out here is the information set that people understand is there. And I think that can have an impact. So in retrospect, I think clearly the objective we had was to get money into people's pockets. There was a big increase, not in permanent displacement immediately. That has happened over time. So I think the hope was that we would provide this income, and within a couple of months, the vast majority of those workers would be right back to where they were. Employers would phone them up and say, okay, time to come back, and they'd all go back. I think a few of us were a little skeptical that was going to happen, or to what extent that was going to happen. And it appears that, overwhelmingly, I think that has happened to a large extent, but undoubtedly there's been some fallout. And the question I'm raising is only if there had been a different menu of options available that at least in the information set of what people understood to be available in the early days, if that could have mitigated some of the permanent job loss we've seen now, which is high. Doing the comparables, you cannot compare unemployment rates in Canada to the US. They're just not comparable. What you really want to look at are job separation rates, and not so much the US, where the policy approach was relatively similar. You want to compare it to Europe. Now, there's lots of other differences as well, I understand that, but I think those kinds of comparisons are interesting and worthwhile. And I think you would find the job separation rates in Canada have been high. I think they have been high.
Thanks, Mikal. Stephanie, this one's for you. You mentioned the notion of a kind of an employment account, a re-employment account. So instead of giving someone a steady stream of benefits over a period of time, more of a lump sum like creation. The question we have is with respect to the fact that a number of EI claimants are on claim quite frequently, 1 or 2 years, one every 2 years. So are you talking about something specific for certain groups of workers, or something more general for all groups of workers?
I think that's a great question, because it's true that the concerns with the current system is that there is a high number of frequent claimant, EI frequent claimant. The EI claimants that are on claims at least 2 or 3 times have had claims at 2 or 3 claims. And in fact, we do see in the data among the claimants that are working on claims that about, I think the latest number I could get was that about 40% of the claimants working on claim were frequent claimants. And so there is a concern that we are kind of using this system to promote requalifying for a claim and continuing to stay on claim. And so I think that the advantage perhaps of a flexible EI account is that if the amount, the account has a fixed amount of benefits, then and not just for for a lifetime, let's say, that individuals might better arrange and have more agencies over when they want to spend time looking for a new job. And so back to your question, does it have to be specific to, does it have to be targeted? Perhaps that's a question that needs to be considered in terms of cost, the costing of this program, to make it specific to previous use of the system, to try to minimize spending the EI account too much too quickly. So I would tend to think that probably yes, we'd want to make it more targeted.
Okay. Thank you, Stephanie. Tammy, you brought up self-employed workers. What should we do? Should we extend EI coverage to self-employed workers? And, on a very similar note, that often includes a lot of gig workers, film and TV workers as well. What should we do there?
That is an incredibly difficult challenge in terms of, thinking about how to cover people. You start talking about income insurance as opposed to employment insurance, because as a self-employed person, you always keep your job, right? You're not laid off in a traditional sense. And so that's a huge challenge to figure out how to do that, to offer insurance in our traditional sense when you get to determine your own income. And I'm not going to pretend to have a great answer in how best to do that, because it is not at all obvious to me. So that's going to be a huge challenge going forward. The bigger question, though, that I think needs answering first is whether or not self-employed people want to pay premiums to be covered. If the answer is no, I'm not sure what the next part is, right? So is this something that we want to force on them so that they are better covered in these types of pandemics? I think that's a bigger question for the long run that needs to be answered outside of a pandemic context.
A good seg and a very quick question for you, Mikal. It's a challenge to answer this one quickly, but we've got a lot of questions on this one. But does kind of those issues that Tammy raises around self-employed workers, you've thought a lot about income support programs before. Should we just take EI down and put in place a guaranteed annual income program? Would that make sense to you?
So that, in all honesty, when Tammy was answering the question, the letters UBI came across my mind. And I mean, that, I see a lot of problems with a universal benefit, but there are upsides. I think it's a difficult issue. But the one clear upside is a solution to this problem of how do we provide any kind of income insurance for self-employed workers, for these gig workers. These are, I think the thing that really struck Tammy and I in that work that we did is just where these folks are in the income distribution in Canada. Right, we often think of company owners, self-employed people, as being at the upper end of the income distribution. They are not. These are really these are folks that are at the lower end, very much at the lower end of the income distribution. These are folks who need income insurance. These are people who have families, and when they experience shocks like we've been through in this pandemic, that's going to have a big impact. I'm sure if you could really get some really rich data, you'd see a lot of the stress that income stress that is being experienced by families has been among these unincorporated self-employed workers with no employees that Tammy was talking about. So I think, it's a real issue that we should be talking more about for sure.
Thanks, Mikal. I've got one final question, and it's for everybody. It's an elevator pitch. It's give me one thing that you think we should do for the future of EI and why, and let's all try to do it in 30 seconds. Tammy, why don't you go first?
Not sure I was ready for an elevator pitch that quickly. I'd probably rethink our maximum insurable earnings to get better coverage across the country. I think that would alleviate a lot of stress across different regions that we see right now.
Very good. Mikal?
So I read a really nice piece, an IRPP piece by David Gray and Leonard, who's I forget his last name, at UNB yesterday, and that was about, I hadn't quite appreciated this, but that's a very important issue, is the durations and how we have these ad hoc systems of extending durations. And I think that came up in some of our discussion today related to local unemployment rates and how we measure those regional unemployment rates. I think that's something that needs a bigger think at this point as well.
Thanks, Mikal. You can read that at irpp.org, by the way. Stephanie, over to you.
I think that I did my elevator pitch, I think, during my last slide. I hope I'll just say it again. I think we can really think stronger about this idea of an EI flexible account. And I think that it would allow and provide the flexibility to spend your benefits and have more agency over how you individuals can spend their benefits through training versus job counseling for reemployment. And I think it would be it's something to really give a serious thought of. It's not a new idea, but it's just that we need to really use that idea now. And
yeah, it's a very interesting option for sure. So thanks for joining us today. I want to say a warm thank you to our wonderful panel of experts. If you are interested in learning more about the future of EI, the IRPP has a new research initiative on redesigning the social safety net for working age adults. You can find it at irpp.org. A video recording of this webinar will be available on the website shortly, along with the presentations. And as you log off, you're going to be prompted to provide feedback on the webinar so that you can improve our future events. Please take a minute to do so. Now, over to my colleague, Ricardo, for the final word.
Thank you to Tammy, Mikal, and Stephanie, our panelists, and to our moderator, Colin. And a special thank you to our sponsor, the School of Policy Studies at Queen's University, one of Canada's premier school of public policy and management, and home to the Master of Public Administration program. Thank you all for your participation and stay tuned for future IRPP webinars. Je vous remercie de votre participation. Nous vous tiendrons informés des prochains webinaires.